So, hi guys, welcome back. Today we're going to be looking at PFIZER Inc. We're going to be doing a stock analysis on this company. PFIZER is an American multinational pharmaceutical and biotechnology corporation, and you can see over the last 5 years the stock hasn't been performing too well. It's remained relatively flat, about 16% over the last 5 years. However, during this time the stock has been incredibly volatile, hitting all-time highs and then crashing very quickly over a very short period of time as well. So today we're going to be doing a stock analysis on PFIZER. We can see over the last year it has been making a comeback. So I hope you enjoy. If you do, please consider subscribing. It is free and it does help me out a ton. If not, thanks for watching anyway. Onto the video. Just some key things I'd like to keep note on PFIZER. You could see they have a PE ratio about 20, which is incredibly cheap, especially in the US market as of right now, and a dividend yield of more than 4%, making it a very attractive dividend buy as well. On top of this, they have recently released their Pfizer and biotech conjoined vaccine as well, which can make it a growth stock in the near term, so it could be a very profitable buy as well. So we'll just be looking at their PFIZER investor relations page throughout this video. We can see just throughout 2020 they hit certain milestones. They had 7 product approvals, out of which 2 were key approvals and 5 were second market approvals. They had 6 phase 3 study starts and more than 95 assets in their current product pipeline as of February the 2nd. They have commercial reach in more than 125 countries where they sell their products, and they returned almost $8.5 billion to shareholders through cash dividends throughout 2020. As previously mentioned, PFIZER is a strong dividend company, and they anticipate continuous strong dividends throughout 2021. They had almost $42 billion in revenue, and they also completed their Upjohn separation to become a more science and innovation focused company as well. So we'll just be looking at some of their recent news updates as well. On May the 4th of 2021, they reported their strong Q1 of 2021 results. They had revenues of $14.6 billion, which reflected a 42% operational growth. And when they exclude the revenue from their COVID vaccine, the revenues grew 8% operationally, including a negative 5% impact from pricing as well. They reported a first quarter 2021 diluted earnings per share of 86 cents and a diluted earnings per share throughout of 93 cents and an adjusted diluted earnings per share of 93%. They raised their 2021 guidance for revenues to a range of between $70.5 billion and $72.5 billion, and they had their adjusted diluted earnings per share to a range of $3.55 to $3.65 as well. They now anticipate revenues of approximately $26 billion from their COVID vaccine, which is almost more than half of their revenue that they generated throughout all of 2020, which was $42 billion. They expect $26 billion from their COVID vaccine, reflecting the 1.6 billion doses expected to be delivered in 2021 under the current signed contracts that they have. They raised their revenue guidance range, excluding their COVID vaccine, by more than $200 million, because of their strong performance of the business that they have as well. They have also recently entered into contracts to supply their COVID vaccine to Canada and Israel beyond 2021, and they're currently negotiating similar contracts with multiple other countries as well. The next thing we're going to be looking at is that they recently have the US Federal Drug Administration has approved their new pneumococcal 20-valent conjugate vaccine for adults which were aged 18 and older. This is the first approval of a conjugate vaccine that helps protect more than 20 serotypes responsible for pneumonia and this disease, including 7 responsible for 40% of these disease cases and deaths in the US. This builds on more than a 20-year legacy of innovation to develop conjugate vaccines as well. They have also got authorization in the European Union to supply their COVID-19 vaccines for adolescents as well. And that's another big step, especially with the profit, with more and more profit coming into PFIZER because of their COVID vaccine. As mentioned previously, with more than $26 billion expected with their COVID vaccine. This was written on May the 4th of 2021. However, now with their COVID-19, this was released on May the 28th. So since then, we could see this $26 billion number increase in the future as well. We can also see here Pfizer and BioNTech to supply the European Union with more than 1.8 billion additional doses of their Comirnaty vaccine as well. This new agreement is to supply more than 900 million doses to the European Commission, with an option to request up to an additional 900 million doses as well. These doses will deliver between 2021 and 2023, so it's not just short-term profit, it's an extended profit as well. And between the two companies, they have committed to a total of 2.4 billion doses of their COVID vaccine to the European Commission since the beginning of the pandemic as well. This new agreement is in addition to the already 600 million doses that has been committed to the EU throughout 2021. An additional 900 million doses are expected to be delivered on a monthly schedule beginning December 2021 and continuing to 2023 as well. The next thing we'll be looking at is their Q1 2021 earning conference as well. We'll be skipping their forward-looking statements. This is always done by them. But we'll be looking at the opening remarks. We can see that the Pfizer and BioNTech COVID-19 vaccine made more than $3.4 billion. In the US, it made about $2 billion, and international about $1.4 billion. The Equalus made about $1.6 billion. In the US, it was just under $1 billion, and international was just over $650 million. This one made close to 538 million. In the US, it was 332 million, and international it was about 206 million. This Vitamax made about 453 million. This was 88% up as well, with more than almost 24,000 patients diagnosed as well. And the Ibrance made close to for $1.2 billion approximately. The US made about 800 million, and international was about 450 million as well. So you can see that revenue grew more than 42% year over year operationally, but excluding the impact of their COVID vaccine, the revenue grew about 8% operationally as well. Updates on their COVID vaccine. They have strong revenue estimates for their COVID vaccine. They anticipate revenues of close to 26 billion for their biotech in 2021. This reflects the 1.6 billion doses that are expected to be delivered under 2021 based on the current contracts. For manufacturing and supply, they have the capacity to manufacture at least 3 billion doses in 2022, where they were only able to manage to make about 2.5 billion doses in 2021, so they are ramping up supply. They're currently also negotiating contracts with multiple governments for supply throughout 2022 as well. And they recently signed contracts with the UK to supply 60 million additional doses in 2021, and Israel to supply doses in 2022, and Canada to supply doses in 2022 to 2024 as well. So with the flu vaccine, they have two potential mRNA approaches to the flu vaccine that are expected to enter the clinic in about Q3 2021. So Pfizer does have flu vaccines, and in flu season, they do make a jump in profit. They will test multiple constructs in the phase 1 and 2 to facilitate selection of the optimal flu product dose regimen as well. Under their pipeline, they have more than 20. This was the vaccine that I was talking about before, and they also have a collaboration with Myovant Sciences to commercialize the uterine fibroids and endometriosis as well. This is another medicine that they are developing. This is only one of 3 of selected pipeline updates. As mentioned that before, they had more than 95 different tests going through in their pipeline system, and these are just some of the ones that they came up with. They have also been working with the Biden administration and Congress on meaningful solutions for patient access. They're looking at rebate reform. They're capping the beneficiary cost sharing in the Medicare Part D, which is the cheapest, I think. And they're also incentivizing the uptake of biosimilars as well. Looking at financials review, their revenue was up 42%. Their adjusted sales was up 110%. Their adjusted expenses were up 7%. Their research and development expenses were up 19%. Their diluted EPS was up between 44 and 47%, so about 45-46%. And their fixed impacts was up 3% as well. In their 2021 guidance, they have revenue of between 70 and 72.5 billion. Adjusted cost of sales at a percentage of revenue is about 38 to 39%. Their research and development expenses will increase this year from about 9.2 billion up all the way to 10.3 billion this year. And their adjusted diluted earnings per share will also set to increase from about $3.20 to $3.65 this year as well. So the next thing we're going to be looking at is just their financials. We can see their net income has been consistently increasing with a dip in 2020, but it does look to make a comeback, especially. However, over the last few years, the profit has reduced. We saw 21,000, then 16,000, then 11,000. But with the recent COVID vaccine, we are looking at a comeback. The earnings per share has also dipped slightly, but over the last year and a bit, it has taken off. So again, with the COVID vaccine, I expect it to go higher. Their dividends have been consistently increasing, so that's a very good sign. However, their payout ratio took a very big jump in 2020. It is understandable as they had to increase their expenses, but a payout ratio of 96% or even closer to 90% shows that there is some risk into their dividend as well. Their book value per share has been remaining solid, so that's decent. Their operating cash flow, their cap spending, and free cash flow have increased. That's a good sign for the company as well. Their net margin is about 24%, which is very healthy, especially for a company that invests a lot into research and development. Their return on equity of 16% is not amazing, but it's still above the good 15% that we want at a minimum. So there is decent use of shareholder equity there as well. Their interest coverage of 8.5 years is quite low, and their financial health of 0.49 is conservative. But it's still touching where we wouldn't want it too close to 0.5, but it's still low debt. But in terms of how long they can pay off their interest of 8.5 years is okay, but not amazing when you look at other companies as well. The next thing we'll be looking at is their valuations. We can see they currently have a price to earnings of 23, however, a forward PEG ratio of 1.3, and a forward price to earnings of 11. So here we can see two things: either their stock price is expected to drop in the future, or their price to earnings will increase. And because usually in these cases, it's usually the price to earnings increasing, the price to earnings decreasing because their earnings will increase. So we are looking at a very big jump in profit, especially over the next 2 to 3 years. As we mentioned, more than $26 billion in additional revenue, and at that, a good chunk will be going into profit as well. So the last thing we're going to be looking at today is just the technical analysis. This is PFIZER over the last year and a bit. We can see this is where 2020 began. We saw the really big jump, the drop in March, my bad. So we saw the really big drop in March, and since then the stock has remained quite volatile. Right now the stock is trading at close to the 20 and 50-day simple moving average, and the stock has rebounded off the downtrend it was, especially throughout July, August last year. The stock has recovered since that, but it's still been quite volatile. In the long run, I believe PFIZER is definitely a buy. We do have a very good indicator of the increase in profit. They have the 95 pipeline products coming in through as well, out of which a few will be selected and approved by the FDA. On top of this, the COVID vaccine, and they have other flu vaccines coming into play as well. So over the long run, I believe PFIZER is a buy. However, in the recent term, the stock has been struggling quite a bit. So if you're looking at short-term benefit, I wouldn't recommend. But if you're looking for anything more than 6 to 8 months, I would definitely recommend PFIZER as a buy with a target price of about $38 as well. So if you do enjoy, consider subscribing. I hope you enjoyed the video. If you do, like and subscribe. And that will be it for today. Thanks for watching, and I'll see you in the next one. Bye.